Now, let's say you actually want to close down some credit cards. And maybe the reason is because basically you have an old credit card you don't use anymore, or you have a credit card with a crazy annual fee, or you just want to be debt free and you don't want to deal with credit. And by the way, it's been about exactly 1 year since I went ahead and closed down every single credit card I actually had, okay? So if you go in my wallet right now, you will not find a single credit card, all debit cards and obviously IDs and so on, okay? But I don't have a credit card anymore, not a single one. And obviously this actually affects your credit score, and by the end of this video, you'll see exactly how this actually affects and how long it takes, okay? Because by the way, it's not going to be an overnight thing. You're not going to close your credit cards today and see the effect, because sometimes your credit score might go down, but then a few months later, it actually goes up. So in this video, you know exactly what's going to happen. And by the way, my name is TommyBryson. If you guys don't know me, well, now you do. And if you know me, what's good? Now, also do me a favor and also smash the like button. Now, the very first thing, guys, is this, okay? A lot of folks don't understand what a credit score actually is and how it actually works, and if you actually need one in the first place, okay? I love to use this example, okay? Everyone thinks, Tommy, I need to have a credit score because if I have a credit score, I can get an apartment, I can get a car, I can get a house eventually. This thing matters because basically it's going to be my report card when it comes to me going to a lender and saying, hey, here's my credit score, I can be responsible to debt, so actually lend me money. But in reality, it's not that simple. And here's an example I actually love, okay? Let's say, for example, you're planning to actually get a job, right? And this job you actually want does not require a college degree. Well, if you go to college to try to get a good GPA and get a degree, does that actually help you get the job? The answer is obviously not, because you're going to college, wasting a bunch of time, a bunch of money, but what you actually want doesn't require a degree or GPA or any of that stuff, okay? So most people, what they want is not a high credit score. What they actually want is, I want to be able to get an apartment. Can I get an apartment without a credit score? The answer is yes. Can I get a car without a credit score? The answer is yes. But can I buy a home on a mortgage, right? Can I do that without a credit score? And the answer is yes, okay? So that's the big thing. How do you do those things? Well, in reality, when you're getting your first apartment, you show them your pay stubs. You show them your bills. That's going to factor in for if you get the apartment or not. When you're buying a car, I highly recommend just pay cash for the car, but you could show them the same exact things and they could actually qualify you for the loan. And when it comes to actually buying a home, it's actually called manual underwriting, meaning you can go to the bank with your pay stubs, your tax forms, everything they ask, and based on that, they will manually underwrite your profile and say, hey, we can qualify you for this much money. So you don't need a credit score whatsoever. So trying to play this game to get a credit score when you actually just want to be able to do those things, well, guess what? You don't need a credit score in the first place. So I don't really recommend you worry that much about it. But here's what actually happens, or what's supposed to happen when you go ahead and actually close down your credit cards, okay? The first thing that usually happens is this, okay? You gotta understand, there are 5 factors, and I have them right now here, when it comes to your entire credit score. The 5 factors are going to be your payment history, the amount you owe, the length of your credit history, on top of that, new credit, and also credit mix. All these things affect your credit score and make up your entire credit score. So when you actually go ahead and close down a credit card, the first thing that's going to happen is, well, most likely your length. Your credit history overall, your length is actually going to go down because it's usually going to be an average. So let's say you have, for example, 2 credit cards and one is very old and one is very new. They take the average and that's your time, your actual time with credit. Well, when you actually close down your old card, well, now they only factor in the new one. So that actually factors when it comes to your length of history, and that could actually push your credit score a little down. The second effect can actually be, hey, if you have 2 credit cards, right, and the entire limit on these credit cards together is about $1,000 and you owe about $500, right, well, your overall amount owed as a percentage is going to be 50% of your credit line, right, which is terrible. You actually want to keep it below like 10%. But when you actually close down one of those credit cards and your new limit is $500 and you have that all in one card, well, you're at 100% capacity, and it actually affects your credit score because lenders are going to see that and say, hey, you owe 100% of all the money available to you. That probably means you're desperate. On top of that, it could also affect your credit mix, because sometimes your credit mix is basically the mix of types of loans you actually have. You know, like for example, revolving loans when it comes to credit cards, or for example, more like fixed loans when it comes to like student loans and business loans and so on, right? So having a balance, being responsible with all of them shows that, hey, you can manage. And if you close on your credit cards, that actually is going to affect your credit score some way, somehow. But that's basically it. You know, it won't really affect like your new credit because you're not actually opening up anything else. You just basically are closing one down, and it won't really affect your payment history because that's usually still going to be there for the most part. But that's the entire idea. That's what's supposed to happen. When you close down an account, it's supposed to usually impact your credit score negatively, okay? That's usually what happens. But here is what actually happened to me. And I actually want to show you guys right now on my phone, because by the way, if you don't have the Credit Karma app, people say it sucks, but I say it works just fine, so you can actually use it. And it actually shows you exactly what happened when I paid off my credit cards about a year ago, and I closed every single one of them down. So let's actually show you. All right, so I'm here. So when I send this video over. So over here is my phone, obviously. I'm going to go over to Equifax, and my credit score right now, as you can see, is 745. And it does have those main factors, right? All the factors I actually told you about. But if you go over here to my score history, and I click, for example, 1 year, you will see my credit score actually was very high, and then it had this entire massive dip, and then it actually went back up somehow, right? So what happened is this, guys, okay? Back in December, my credit score was around 768, okay? I still had my student loan debt. I still had, for example, some credit card opened, and I actually had, for example, a business loan. But then I went ahead and I paid off everything I actually owed. What happened was this, okay? Basically, I no longer had those balances. Some of those accounts actually closed down, like the student loan ones, and that actually affected my credit score positively, which is actually awesome. And it went up from 765 all the way up to actually an 811. A whole 43-point difference, okay? Is actually spectacular credit score. However, though, what happened next was this. I went ahead and I closed down all of my credit cards, every single one of them. It took a while for it to register and for information to be sent over to the credit bureaus, but when it was sent, my credit score started to dip. It went from that to 790, from 790 to basically, right here, to 763, and then all the way down to about a 674. That's what actually happened, okay? Now, it obviously probably is not going to be the same for you, because I closed down literally a lot of accounts. I closed on every single account I had. As you can see, I have basically nothing. But then, surprisingly, a few months later, guess what? My credit score basically averaged out to about 744. Because what actually happened was a positive thing. I closed on accounts, but guess what? The balance on those accounts was actually also paid off. So that's actually a positive thing. I had loans and so on. All those things were closed down, but they were actually paid off. Now, here's what's going to happen within the next year or 2 years, okay? Because remember, if you go to college and you drop out, eventually your GPA just really won't matter. There won't be anything to actually track because you're no longer taking any classes. Same thing here with your credit score. When you don't have any debt, there's nothing to actually track overall, right? So your credit score is eventually going to disappear, at least for me, because I don't have any debt whatsoever. So within a year or 2 years, I expect to actually become credit invisible. I won't have any history whatsoever. Now, the question now is, Tommy, was this worth it? Should I do it or should I not? Well, the answer is this. First of all, if right now you're thinking about buying a home and basically thinking about getting a mortgage, the idea is don't do it, because it's going to affect your credit score negatively, and it's going to be a drag trying to explain, I closed this down because I paid it off, but now they're seeing that your credit score went down. So basically, if you have something coming up within the next 12 months and you actually need your credit score to be the same, don't close it down. But if you actually don't have anything that's actually going to be in the next 12 months or whatever, feel free to actually close it down, and your credit score will stabilize for the most part. But even if it goes down and stays down, if you close things down and you pay things off, when you actually go to buy a home, and you actually want to borrow that much money, the conversation is different because, hey, yeah, my credit score is trash, right? It looks like trash, but what actually happened was I want to be debt free. I paid off everything. I don't owe anybody any money. I have a lot of cash here. Now the conversation is a lot more different. Now tell me, overall, is this worth it? Was it worth it to go from an 811 all the way down to 745 and potentially to a 0 score within the next few years or whatever? The answer is absolutely. You know, not having any debt means not having to be worried about being in debt, not having to be worried about playing the credit game, having to be worried about I have this credit card with these points, this credit card over here. And it's actually helped me a lot more when it comes to my spending habits, because sometimes you don't have money to do something and you grab the credit card, you pay it for it or whatever, and then you pay it off next month. But then sometimes you should have never bought that thing in the first place. And sometimes you could actually think you're going to pay it back, but then you might not be able to pay it back. So overall, it is 100% worth it. Now, if you're the person that's just saying, hey, I want to use my credit cards, I just have a credit card with an annual fee, you can close it down, no problem. It'll probably just go back to normal within the next few months or whatever. It doesn't really matter that much, okay? Because you are playing a long-term game. But for me personally, I don't care about credit scores because what I actually want is to be able to buy a home, and I can do that without a credit score in the first place, okay? So that's the idea, guys. Thanks for watching. Like, subscribe, hit the bell so you're notified. And I have a question if you made it all the way to the end of the video. It's how I know you actually watched all the way to the end, okay? And the question is this, okay? How many credit cards do you have? And are you planning on paying them off in full and closing them down? Or are you keeping them open? And I want you to tell me why. Why are you keeping them open, or why are you closing them down? For me, I'll start. It's because I close everything down because I want to be debt free and I don't want to be worried about owing anyone money anymore. Comment down below, let me know. As always, thank you for everyone that is on Patreon with us, and I appreciate you guys a ton. If you want to join us on Patreon, the link is down below. You get exclusive content, and on top of that, also like, subscribe, hit the bell so you're notified. Another video is here. My face is here, and as always, Long Term Team officially out.